Well, it looks like after yesterday's incredible stock market rally, investors are taking some profits today. We've got stock futures lower across the board. Dow futures now down about 1%. But the real story here is the market's jaw-dropping gains, even in the face of an unprecedented pandemic and now civil unrest in our country. Since its low in March, the S&P 500 is up 44.5%. It is now positive for the year. The Dow up a staggering 48.3%. And the NASDAQ has rocketed nearly 45% to its first record close in about 4 months. And new data shows that it is the retail investor, not the institutional investor, who is driving this stock market rally. Investors seem to be unfazed by news that the U.S. officially entered a recession in February. The National Bureau of Economic Research said the economy reached a peak in February, marking an end to the longest economic expansion in post-World War II history. But the group said the downturn may actually turn out to be briefer than past recessions. Jared Blikre joining us now for a closer look at the stunning stock market performance. And Jared, I also want to bring to folks' attention that in another positive sign, the rally is not just concentrated in those big name tech stocks. There's sort of been a breadth to this market rally. Tell us why that's so important.
Yeah, that's a development that just started happening about 17 trading days ago, and that was the beginning of this latest leg up. And if we look at a chart of the S&P 500 year to date, I can illustrate what we're talking about here. Now, the first leg of this rally off the lows was largely driven by tech, the mega caps that we talk about, the FANG stocks, and not a lot of participation, a lot of broader participation. And then we kind of went sideways in here for about a month and a half, and it looked like the market wanted to roll over. But then all of a sudden, we got these cyclicals and value stocks like energy stocks, industrials, financials for that matter, all driving higher. And so this latest leg, 17 days old now, 17 trading days, has seen broad participation. And it is fitting that the very day that the S&P 500 goes positive, albeit only by 5 basis points, we found out that we were in a recession, but not a lot of big news there. And just looking at the sector performance over the last 17 days in this leg, we can see energy up 30%, financials up nearly 30%, along with industrials, real estate, staples, and discretionary. And then to the downside, healthcare has been lagging along with the tech sector. We see it's only up about 11%. Now, can the market go higher? Of course it can, but it looks to be a little overbought right now, and we have that big Fed meeting tomorrow, so we might be taking a pause right now.
And Jared, we're seeing these retailers continue to rally. JCPenney, which is now bankrupt, their stock up 96% yesterday. Yet Macy's stock continuing to rally. They came out with a new debt raise, but still the retail rally is strong.
Yeah, this is one of those signs of froth that we're seeing right now. I've compiled a heat map of a bunch of companies that have either declared bankruptcy or have been rumored to be about to, and you can see the performance. This is one-day performance as of yesterday. Hertz up 115%. Chesapeake, an energy company, up 182%. Whiting Petroleum, which has been in bankruptcy for months, up 150. JCPenney here, up 95. And if we look over the last 5 days, we can see this latest surge is just absolutely stunning. Hertz is up over 500%, for instance. But if we add the pre-market quotes to these, we can see that there is a lot of profit taking right here. We can see Chesapeake is already down 47% in the pre-market.
Yeah, thanks, Jared.